Euro dollar. So the euro continues to chop around, but the overall downtrend remains firmly intact, and the market should take out 110.87 support, below which will expose fresh downside towards that July base at 108.09. At this point, only back above 114.67, that May high, would compromise the current downtrend. Sterling dollar. So cable remains pressure to the downside, with the market now focused on trying to establish below key support from back in May at 150.90, below which exposes psychological barriers at 150 further down. At this point, any rally should be very well capped into the 153 area, while ultimately only back above 156.59 would compromise the current downtrend. Dollar yen. So dollar yen has been slowly consolidating over the past several sessions, but the market showing contraction in this volatility is warning of a break over the coming near term. At this point, a lower top is now sought out at 121.74 in favor of fresh downside back towards that extreme low that we saw back in August at 116.12. Really only a close back above 121.74 would negate this downtrend outlook. Euro Swiss. So Euro Swiss remains in a recovery outlook, with this market now pressured towards the next key measured move objective, which comes in at 112 further up. At this point, any setback should be very well supported, with only a break back below 107.14 to compromise this outlook. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend. The market recently stalled out by 72.80, which is a perceived lower top, in favor of the next downside extension below that recent multi-year low at 69.08 and towards a potential measured move objective in the 65 area further down. At this point, only back above 74.40 would compromise the current bearish outlook. Dollar CAD. So dollar CAD's finally seeing a bit of a correction, a healthy correction off those fresh multi-year lows that were seen earlier this week at 34.57. At this point, any setbacks though should continue to be very well supported, with the higher lows now sought out ideally above 130.12 in favor of the next upside extension beyond 134.57 and through 135 further up. Kiwi dollar. So Kiwi has been consolidating over the past several sessions, though the market remains locked within a downtrend, and a lower top is favored in favor of the next downside extension back below that recent multi-year low from August 24th at 61.30 and into the 50s further down. At this point, only back above 67.40 would compromise the bearish outlook. SPX 500. So the S&P 500 is now very well offered into rallies, with a medium-term lower top now sought out at 2022 in favor of the next downside extension back below that recent extreme low from August at 1833. At this point, only a close back above 2022 would take the pressure off the downside and force a potential resumption of the longer-term uptrend in this market. But again, while the market holds below 2022, we're seeing the potential for the formation of a major structural shift here, with the market now focused on the downside over the medium term. And gold. So gold continues to show signs of basing off that recent 1073 multi-year low that was set back in July, and a higher low is now sought out in the 1100 area in favor of the next upside extension to be confirmed on a break above 1170 and towards 1233 further up. At this point, only a close back below 1100 would compromise this recovery outlook.